Hey folks, and welcome to the latest Stocks and Markets podcast. I'm Chris Versace, portfolio manager of TheStreet Pro Portfolio. Joining me today here at the lovely New York Stock Exchange is Noah Weidner, TheStreet's chief markets reporter. Noah, thank you so much for joining me.
Thank you for having me.
Now, this is kind of an interesting time, Noah. We're at an interesting, crux, if you will.
Yeah.
We're coming off a recent sell-off in the market, given renewed U.S.-China trade tensions. We're at the mouth of the September quarter earnings season. Big banks are reporting. Market's not exactly falling in love with what they're seeing, but how are you doing?
How am I doing? Well, I'm here, so that's a great start.
That is a good start, and just so everybody knows, wasn't exactly the smoothest of trips given the nor'easter.
It was not. That's more my weather. I'm out in Seattle, and you would expect to see more of the dramatic weather, like I think on the West Coast, Northwest this time of year.
I don't know.
But I feel like every time that I come to New York, a little bit of Seattle and the Northwest follows me. When I was here last September, it was pouring and couldn't get out. And this time I had 5 rescheduled flights just to get here.
Wow.
So just, waited it out.
But you're here. Are you properly caffeinated?
I have not had a coffee all day, but I know there's a lot of coffee.
There is a lot of coffee. Doesn't sound like you're staying true to your Pacific Northwest roots.
No.
But we'll talk more about that later.
Absolutely.
What's your take in the market?
My
right?
take?
And I say this because we've had, with the exception of the last couple of days, a really strong environment. September bucked this trend. The beginning of October was good. We're hitting new highs. Are you concerned that perhaps we were, markets near term a little over its skis, got to get through earnings? What's the Fed going to do? Yeah, all these things, Noah. What are you thinking about?
I think there's a lot of folks that are kind of operating in the dark. The lack of economic data, I think, is the highest concern among a lot of people I've been talking to over the last few weeks. So they're operating on, I guess you'd call it alternative data, or
Correct.
at least alternative data points. And you've seen some of the payroll data that's come out. Like ADP continues to put out their data. It doesn't look too great.
Put their data
Carlyle
out.
put it out. And then you're looking at some of these other, soft data indicators, like consumer sentiment continues to sag. Not by an amount that is really dramatic, but it's enough that people are thinking okay, so where are we at? And I think the answer is we don't really know, which I don't think anything in that sense has really materially changed. I think even if you had the economic data come out in the last few weeks, a lot of investors would be like, well, I think we need a little bit more to understand where we're going. But at the end of the day, I don't think anything has materially changed with the Fed's trajectory. It looks like we're still on track for 1, probably 2 cuts by year end. And then the picture, I think, gets a little more blurry from there out. But they've kind of at least admitted as much where we should be going, or where they think we should be going based off of what we had. I don't know if anything that we've seen changes that.
To me, it's kind of an evolving landscape, but that's always the case with the Fed. You mentioned that we're not getting a lot of data. I would counter that folks who just only rely on federal government data, that they're not really doing their job, because there is another world of data out there. The one I just saw that was kind of interesting was the Cass Freight Index for September, where they actually showed a sequential pickup compared to August. That's kind of counterintuitive with a slowing economy. But then again, that was September before the government shutdown. And I think here and now that the longer the shutdown goes on, and I think Polymarkets and this other one that I can never pronounce, Kalshi, is saying about 30 days, maybe a little bit longer now.
Yeah.
That I think will be a speed bump for the economy. How much the Fed reacts to that, I don't really know. I think the bigger question is, what is this alternative data saying? Because what we did get from ADP and from the Carlyle numbers were very weak economic numbers in terms of job growth for September.
Yeah.
But what else are we going to start seeing? And do we see more federal layoffs? Only, I use that in air quotes, 4,000.
Yeah.
But that adds, and that probably means that was a net loss of jobs in the month of October. So
yeah, and I suspect I'd be very interested to see once we actually get the full count what that actually looks like, because the federal government has admitted that part of their policy, at least during the shutdown, the Republicans plan to lay off particularly a large number of quote
massive was the number.
Massive layoffs of specifically Democrat-targeted positions. So
Ridiculous.
I don't know what that ultimately pans out to. They have already at the CDC brought some people back that they laid off at one point.
And they brought some people back, I think, behind the CPI calculation because they have to for Social Security.
Yeah. They brought back some folks. I guess that they need 2 or 3 weeks of of people working on that to get that out the door.
Yeah, and I think they promised that there will be a September CPI by the end of October. What I find fascinating about this timing, though, is when the Fed meets, which I believe it's the 27th, 28th. Wouldn't it be ironic if the CPI number happens to come out after that?
Yeah, I'm not sure that that's going to be too helpful in this policy meeting. I think it might be fair to call it a little bit of a sunk at this point and just chalk it up to what is already on the board.
But if you let me float this wild theory to you, right? So if you're the Trump administration and you want lower interest rates, but you want a strong economy, so that, if there isn't a lot of data coming out, and you're, I won't say purposely keeping the government closed, but you're not exactly rushing to reopen it either. As you mentioned, they kind of want to make some moves against their opposition, let's call it. To the extent that we hear more about, federal layoffs and already, that weak data that we talked about, could the thinking be that perhaps the Fed might need to do more sooner?
I definitely feel like that is an argument. I also think that it would be kind of against the, we rely on the data position, specifically Jerome Powell and a number of other members.
Well, but you got negative ADP data for September.
That is true.
And other weak data for, September, and then more layoffs. And the Fed has said that they're more focused on the employment market now.
Absolutely. I think that they're probably, at least based off of the past, how they look at different data points seems to favor a lot of those government-issued BLS numbers.
Yeah.
Obviously, because those are the numbers that they get. They say, okay, great, that seems to agree with all the other data that we have coming in. I don't know if that means that it's going to result in them doing anything sooner. But I think that ultimately the employment picture might also be a little distorted by what even is the government layoff number? What is that? Is that a significant contributor as it has been the last few months?
Right.
Is that a thing that really affects the broader economy? I think maybe some of that thinking might be playing in here. I don't know to what extent. But I don't think that based off anything that's happened in the markets the last few weeks that we're looking at a material change in policy, because it feels like we're kind of just in a freeze right now.
I think that's right. I do think the next known data point is going to be the Fed Beige Book, which we get on Wednesday afternoon. I'll be reading it. I'm sure you'll be reading it, and we'll be sharing our thoughts on that. But if it supports some of the other data that we've gotten, I think we're likely to get those two other Fed rate cuts.
Yep.
But if it falls out of bed materially, I think that might change things. Fair to say?
Yeah, I would agree with that.
Okay, let's move on. Let's talk about the other big topic and uncertainty. Really two things. One, renewed concerns about the AI bubble, and this renewed U.S.-China trade uncertainty. We're going to talk about both.
Yeah.
I'll let you go first with whichever one.
Yeah, I think kind of running abreast of all of this is this debasement trade that has kind of come back from the dead. And I think it might be animating some of the bigger concerns. As you see the dollar falling, and if you look at the S&P against other currencies when adjusting, other markets adjusting for currency, the S&P is actually one of the least well-performing markets in the West this year.
Okay.
You see the dollar falling, dollar index has rebounded a little bit. You see gold rising very rapidly. So you kind of have, I think, this acute risk, awareness that is existing. And then at the same time, you have all these people that are really animated and excited about AI. And I think they're slightly concerned now about, this is starting to feel a little bit more like an FTX situation in terms of how legit are the spending numbers that are coming out. Does this strike you as kind of weird that all these businesses are doing business with one another?
You're referring to the fact that there's a lot of potential commingling of dollars with OpenAI, NVIDIA, and who they're backing.
Yeah, absolutely.
Okay.
And so I think that kind of commingling of investment, and in terms of making these what resembles vendor finance deals, is eliciting a lot of .com fears. How legitimate are they? I don't know. I've talked to a bunch of folks that are not really that concerned about it, because the difference is that the large tech incumbents today make a lot of money from their core businesses. AI is kind of a moonshot project for them. And so when you're talking about AI and AI investment, they can just turn that off at any time. I mean, they're spending a lot of money. I did a story a few months back where I looked at how Meta blew through substantially all of their cash. and moved to the property and equipment, the PP&E part
Yeah.
of their balance sheet, and all of that was capital spending on AI, and then they went and tested private credit to get even more money to build AI. In theory, you could kind of just, to a certain extent, stop making these investments if you said, well, this isn't really working out anymore. These are not substantially contributing to the business yet. Well, of course, they are large costs, and making these tech businesses very capital intensive.
I think if we were to listen to Microsoft, ServiceNow, and some other companies, I think they would take the other side, that they are seeing robust adoption, they are seeing it driving improved pricing, and I think Microsoft is now saying that the capacity crunch that they expected to be over in the second half of this year is going to extend well into 2026. And I think when we look at that, as well as some AI adoption and, more importantly, usage statistics, my sense on it is that, and I'll give you this, we're not in the first inning, we're not in the second inning, but we're a ways away yet from inning 7, inning 8.
Yeah.
So it's hard to tell, I think, but we're probably somewhere between 3 and 5.
Absolutely.
Right? And if we're having this conversation again, and I hope we are, in 12 months or 18 months, then I think, again, based on the updated, adoption and usage figures, we might be saying that, the incremental rate of adoption or incremental rate of usage is slowing. And I think that's the time to be concerned.
Yeah, absolutely. I think that people are still, on the whole, very optimistic. You see that the market fell on Friday, and then I think on Monday and Tuesday we're getting big announcements from both. Broadcom is partnered with OpenAI. That's coming back to the forefront.
Then ARM.
Yeah,
AMD.
Everybody is suddenly making positive announcements.
Right.
I think the question at this stage is, I think kind of against the backdrop of OpenAI rolling out Sora 2, their social media video app. The question is, are we building consumer apps here? Are we making an enterprise case, or are we building a product that's going to solve big problems? And I think some of these elements are competing with the overall. Is the spending even going to happen? Is the large dollar amounts that we see, is that actually going to happen?
Right.
And is there demand to supplement that spending? Because at this point, OpenAI does not have the cash flow to make all of this happen.
No. But it's also interesting though, when you hear OpenAI doing these things, how are they doing it? Is it OpenAI themselves? Is it part of Project Stargate? What does that mean with Oracle? And because Oracle threw out, as you remember a couple weeks back, some very big numbers that really caught the market off guard. And I think I believe they have an analyst day or an investor day coming up later this month.
Yeah, more color on how they got to their nearly $500 billion backlog, I think, is kind of necessary, because people saw that and maybe, I think, overlooked the fact that the quarter was fine. And I think investors were more sold on what's coming down the line over the next 5 or 6 years. We're talking about $500 billion in backlog. It probably rose in this quarter as well, if the spending is any indicator. I think the key question is, if we've learned anything from the last few months with businesses making commitments of, we're going to spend this amount of money on infrastructure, we're going to make this investment in the United States, how much of this money is actually going to end up invested? I think that is a key question that a lot of investors are a little skeptical of.
So you're raising the historical buyback question, where buyback programs get supersized, and is it a cosmetic effect designed to help buoy stock prices? Maybe the program gets done, maybe it doesn't. But I will say, of late, I've seen more companies completing programs and reauthorizing their programs. And I think when we look at, even just some recent numbers, in the PC market, the smartphone market, we're seeing more AI-enabled devices ship. I think that bodes well for AI adoption on the consumer side. And when we talk about, whether it's SAP, ServiceNow, like I mentioned, CRM, Microsoft, others, we are seeing AI adoption continue on the enterprise side. So I think we're going to see rising capacity levels, rising capacity utilization levels inside these AI data center infrastructure markets. And I think that means that at least for 2026, maybe into 2027, I think we're going to see more capacity come on stream.
Yeah, I have no doubt about the ability of them to expand capacity. I think it's about the demand.
Right.
How much demand is there? I think the enterprise side it still remains to be a little seen. There's obviously a lot of spending that enterprises are making into building AI into their products. I think the reception has been, I think you could call it a little lukewarm from consumers. You take a little bit of a read of like, how's customer service enabled by AI? It doesn't seem like a lot of people are too enthusiastic about being met with an AI
No,
robot.
but I think the question there is, especially like this holiday shopping season, right? Where, surprisingly, consumers are using AI to identify gifts, and there are now tools inside of AI like ChatGPT to go buy them.
Yeah.
So I think that the concern near term over usage and adoption is a little overblown.
It might be, but I think it ultimately comes down to if there's enterprise demand, it's going to be fantastic.
Yes.
The consumer demand, I think, is a little bit more questionable because the majority of questions that people are asking AI, like on the consumer side, of like ChatGPT, like OpenAI and Anthropic,
They're asking relationship questions, Noah.
A small amount, yeah. They're asking them understanding questions. It's These are products that are supplanting Google. So naturally, the edge case is going to be advertising. The question is, how quickly can you scale up an advertising business, an e-commerce business, shopping business? It doesn't really seem to be compatible with kind of like the pipe dream that was originally pitched by a lot of these AI companies of, oh, are we going to like solve these big? It's never been. I think Anthropic's ad that they're running right now is it's never been a better time to have a problem because you can have it solved so quickly. I think that some of the bigger problems, I don't really see the consumer looking for help with those, at least at this stage. Maybe it's because they need to be shown it.
My biggest concern, my biggest problem that I needed to have answered was, I have these ingredients in my refrigerator. What the heck can I make with them?
Fantastic questions.
And I got a champ answer. So
and you were happy with the result.
I dined very well that night. Probably better than if left to my own devices.
Then that is a great advertisement for who helped you with this.
That would be ChatGPT.
So shout out to ChatGPT on account of that. That's fantastic.
All right. So I think we can put a pin in this part of our conversation where we both agree that there will be more capacity added. Your question is, are we going to see the demand to fill that capacity?
Yep.
Come as people think it will? I'm a little more bullish on that.
I would consider myself very much so in the camp of stay tuned.
Okay, fair enough.
Enterprise, I can see it. Consumer, are people going to pay if the credit prices go up, if they don't expand, the use cases in a visible way? Those are big questions.
I think it's going to continue to get better, and we're going to wind up using it more, and probably in ways we haven't thought we will. But we'll stay tuned on that.
We can stay tuned.
Okay, so we talked about the Fed, we talked about AI. Let's talk about U.S.-China trade. The question that I was asked earlier today is, do you think that Trump and Xi are going to meet in South Korea? And I said, I do.
Yeah.
I think they're going to meet, and I think all we're seeing now, with the latest back and forth on them is just kind of saber rattling, which we've seen before, setting the stage for the conversation they're going to have. And I think I read somewhere that if you look at classic game theory, you're kind of poking your opponent, looking to see if they're going to back down before you really negotiate.
Interesting. That's an interesting theory. I think if you look back at since Trump's second term started, this is just kind of on brand, right?
Yeah.
I mean, every single economic negotiation is like a WWE match, right? And it's almost not so much about the actual negotiation than it is about this country is taking from us and they're not giving anything back and we need a better deal. And it's all of the small little things that add up to eventually you get some sort of deal.
Some sort of deal, but not the in-your-face, big threatened if it doesn't happen.
Yeah, I think, look, in April when all of the tariffs got announced in the Rose Garden, I think that at the time the market was...
You mean with that ridiculous chart?
With the giant chart he brought out. And honestly, I need to find out who does those giant charts. I could use a few of those. I think Wall Street was, to be completely honest, a little lackadaisical about it. They were a little clueless. Like, these were all the things that he said that he was going to do. And so, like, if you're still in the midst of a tariff program, if you want to call it that, and the market is corrected, has now come back to all-time highs. Like, what happened on Friday, I'm a little surprised that Wall Street is still surprised. I mean, sure, there are a few, like, punches here and there, a few surprises, like, surprise isn't a Trumpian term. But at the same time, like, this is par for the course. Why are we still surprised that we're poking the bear here?
Were you surprised that that announcement came Friday at 5 o'clock, and by Sunday night, he already started to soften his position a little bit?
I think there are a lot of theories that are outstanding for why you'd make an announcement on a Friday evening, Friday afternoon, and I think in journalism and in reporting, it's like you drop an announcement you don't want anyone to pay attention to after noon on Friday. Obviously, the market did pay attention.
Yeah. Well, it was leaked that he was going to do something, and then we had the 100% tariff announcement, Friday at 5. So the market was already selling off on Friday afternoon.
And then we wake up on Monday.
Yeah.
And everybody realizes, oh.
I think the words were from the president, it's going to be fine. And I think people kind of breathed a sigh of relief, still not knowing what the actual rates might be.
It is a little strange to me, and maybe this is just my viewpoint on it. It is a little strange how they put so much stock in what he has to say when they didn't listen to what he had to say when he was running for office. Like, they were blindsided in April when he said, oh, tariffs for everybody, and then he walked it back, and people were still freaking out. But then when he says it's fine, we're all these months later, when he says it's fine after a few days of big tariffs are coming, like, huge, gonna be huge. Everybody's like, okay, Monday's gonna be normal. Monday's gonna be great. Let's get the lasagna out and let's celebrate.
Yeah, I mean, he has a habit of going big and then kind of walking it back, and I think the market's becoming, hip to his game, so to speak. I mean, I wouldn't say that he's a one-trick pony, but we've seen this trick, several times.
Yeah.
And I think the market's getting a little hip to it.
I think a big question that's kind of like sitting, and I'd love to know your opinion on it, is how the tariffs might even fare once they go to the Supreme Court. Because we're having all these discussions about the tariffs. A lot of the people I've talked to over the last few weeks working on stories are mixed on whether or not the eventual striking down of the tariffs would be really good or really bad for businesses and the economy. What are your thoughts?
I think it depends on if it happens, right?
Yeah.
So if they do get struck down, that's going to present a complicated picture of what needs to be paid back by whom, and where does it go?
The refunds.
Right. And then at the same time, if they're kept in place, then I think we're back to the drawing board of, okay, where are these negotiations? Where do we wind up? Because we still don't have a trade deal with China, right? Yeah. It's been extended. And I think that's why folks are really anxious to see what happens between Trump and Xi in South Korea later this month. Yeah. Maybe we start to see some real progress on that front.
I would argue that probably above all else, and yet China is a huge trade partner. I think they're the second largest trade partner after Mexico now.
Top 3 for sure.
Top 3, definitely up there. Depends on which stats you look at. No doubt about it. I think that there is a bigger elephant in the room. I would say that is the eventual reveal of these tariffs. If we're having these negotiations, does it matter at all? I mean, the two prior courts.
What do you mean by the reveal?
The review of the tariffs.
Review. I'm
yes,
sorry.
Yeah.
I'm sorry.
I guess you could call it the Great Reveal. Because if the two prior courts' decisions are upheld in the Supreme Court and the tariffs are struck down, we're talking about there's going to be new ways of implementing tariffs. More questions like in the Rose Garden in April. How does this affect the existing tariffs, the existing negotiations, all these investment commitments that countries made in tandem with businesses in their countries to reshore domestic capacity? How many of these promises are going to be made good if this eventual decision is, you know what, we looked at those two decisions and we said, okay, yeah, tariffs are looking kind of illegal. There's no basis for emergency power use here. How does Trump react to that? Because he's indicated a willingness to find new ways to implement them.
I think he's a man with an agenda.
Absolutely.
And I think he is going to find however he can to get what he wants. Good, bad, or indifferent, he's dragging us along with him.
I think the question is, where do you go next? If your first way of implementing tariffs is well, you can't use emergency powers, and what's your second option? And I think, does that introduce a lot of questions for the market?
You would say questions. I would say, does it introduce renewed uncertainty for the market? And it sounds like your thinking is it could.
I'm thinking the answer is yes. Yeah. Now, of course, this is all based on the assumption that the Supreme Court goes with God, which is the 2 prior court rulings saying, this is, you can't use emergency powers to implement tariffs in this broader prospects. I think the question is, if it does happen. And it doesn't seem to be something that's like bubbling up, becoming a significant
we're not hearing a
component.
tremendous amount about it. So it could be one of those kind of out of nowhere, I won't say black swan events, but it could be something that triggers something should it rear its head.
Yeah, and I would say it's probably likely that barring a China trade deal being announced, it could be one of the largest elements of how investors play Q4 and how stocks trade, even if we have strong earnings, which we can get to in a second, which I think everybody is expecting strong earnings. I think that if the tariffs are thrown out, that's probably going to just put us in a renewal of what happened in April and what we've seen subsequently in various times where he came back to the table and said, hey, we're going to have this tariff on this country. And now we've got to deal with these guys and they're going to invest all this money. Right. We're going to have to start over again.
Yeah.
And the question is, as you go into 2026 and you have a midterm election next year, does that go anywhere? It certainly looks like it's going somewhere, but where? The big questions.
These are big questions. The thing we'll have to stay tuned to. You had just mentioned moving on to earnings. Let's do that. We're at the mouth of earnings season. Big banks have started. Investment banking activity looks good. Trading activity looks good. But the markets are not really jumping up and down. I think that's partly tied to the fact that there's some uncertainty about IPO activity in the current quarter, given the government shutdown. And the SEC is not reviewing, filings. There might be a little bit of a speed bump as a result in the IPO market. But I was sitting here earlier today talking to Carolyn Woods, saying that I do think 2026 will continue to be a good year for banks. We'll continue to see a pickup in IPO activity and probably better M&A activity as deal hurdle rates come down, should the Fed deliver those rate cuts that it's kind of telegraphed.
Absolutely. I think the last small, I don't know how big it is, I think we're still constantly pricing that here, is the extent to which private credit is a legitimate concern after this Tricolor bankruptcy and how the significant amount of write-downs from banks are coming out. And private credit, for the unacquainted, is basically non-bank lenders, but sometimes banks lending to businesses that in general seem to have a little bit of a riskier profile. And the bankruptcy of one of these large auto part, I guess, merchandisers, retailers, if you want to call it that.
I think First Auto, right?
Yeah. First Auto, which owns, I think, Tricolor, a few other businesses. Obviously, the business, there was no money. So there's now a fraud investigation. It might be an isolated incident, but of course, I think there was a significant amount of write-downs. So JP Morgan wrote down over $100 million specifically related to it.
There was some question about Jefferies and some others as well.
Yeah. There's a lot of businesses like that out in corporate America that are kind of just borrowed a lot of money. Obviously, they've got a lot of leverage. They got a lot of physical property. They got a lot of leases. And I think it remains to be seen how they can adjust in this economy.
Now, when you say this economy, which kind of brings us full circle now, what are you seeing on this front? Because it seems like things are slowing down. It's not as forthright as being the economy is X, right?
Yeah.
So you've got to think about different buckets. Is it are we talking manufacturing? Are we talking services? Or are we talking about the consumer?
Yeah.
What are you saying?
I think this question is a little regional as well. There's a lot of these great graphics about certain states are in recession or they're tipping over or they're looking great. And a lot of the states that are capturing AI data center spending, I think data center spending alone was a significant contributor to GDP, whereas consumer spending was almost a non-player. I
believe that the stat I saw is that AI data center, has eclipsed consumer spending.
That checks out. Given all that we've seen, the consumer is still in a kind of state of saying one thing and doing the other thing. There's a lot of evidence the consumer is still doing sort of fine in certain parts of the country.
It depends. Well, there's that.
Yeah.
It depends. Are we talking lower income consumer, upper income consumers? Upper doing well.
Upper obviously driving now about half or more of the spending.
Depending on the stats.
And I think that one of the microcosms of this that we're like I'm seeing is like in the Southeast specifically, which has been really driven by housing. Like a significant number of small businesses in the Southeast have been in the home building sector, and they've been developing. I guess one way to call it is like completing reconstruction. Like we stopped reconstruction after the Civil War, and all this land was left cheap. We didn't continue developing it. We didn't build the necessary infrastructure. These state governments have all this cheap land, a lot of these large apartment builds and like home, like I don't know if you would call them just these large builds, hundreds of homes finally happening. A lot of people are like a magnet moving to these lower cost havens, and we're attracted in part because they were cheaper, and it seems that people in the Southeast are making less money than people in the Northeast or in the Northwest or in the West Coast, regionally speaking. There are some concerns with that, obviously, when your home building sector has been frozen out for now almost over 2 years, when you have other industries that are extremely reliant on interest rates. So you do have a case of have and have-nots here, I feel, where certain parts of the country are kind of insulated by technology, large capital expenditure spending, like these large build-outs, and have like a large base of affluent consumers that are willing to spend. The Southeast is not really that, and there's kind of another potential headwind coming in the sense that right now the government is shut down almost exclusively because Republicans and Democrats cannot come to the table
that's right.
to make a deal on health care, which such is the story of the last 2 decades in American government.
Correct. But I think this time around it's a will deal once we're no longer shut down.
And I don't think the Democrats are in any position to trust them on that. And why should they? Every single time that they've attempted to make a deal, it hasn't kind of been made in earnest. They went and did their own thing anyway.
So who gives in then?
It seems after the Trump administration's announcements, I think this morning, they don't plan to give in. They plan to direct all of those tariff revenues to WIC and to find as much money as they can to pay the troops and everybody else.
So I'm going to reiterate the question. Who has to give in?
I mean, knowing how Democrat leadership operate, it's probably going to be the Democrats. Yeah. I mean, it doesn't matter how you feel. Just look at the Democrats. I think Donald Trump said it best. It's like, he said, I really thought that they'd fight me. I really thought they'd put up a fight. And they haven't. And I get that the Republicans run all of the branches of government. Like, they are decisively in control of them. And, to get that 60 votes, I mean, you can either change the rule or you can go get the 60 votes.
Right.
But to be fair, Democrats don't. What are they going to fight? Like, what are they going to put up a fight on?
Who are they going to put up to fight? I think a lot of people are wondering as well.
Absolutely. At this stage, it seems to me that the Republicans will eventually likely fold, and that's just because the people that are on the fringes of the party, the Marjorie Taylor Greenes, the Freedom Caucuses, are kind of wised up to I think it was Marjorie Taylor Greene that has started making a lot of sense recently and alarming people on Twitter, X, whatever you call it,
I'm sorry, you said making sense?
Yeah, making sense to people. Something to the effect of our party doesn't have a plan on health care, and it's saying, yes, we have to make a deal with the Democrats, and you have, the Speaker of the House saying the way Obamacare was implemented is really insidious, and you can't undo it. Like, it is what it is.
And I think this is when President Trump said something along the lines of, referring to Marjorie Taylor Greene, I think she's gone crazy.
I think that a lot of folks, including a lot of moderates, are saying, this is probably the first time that you've ever seen her sort of like making a cohesive statement that kind of contradicts the president, like in a lot of big ways.
Yeah.
And I think the Republican base in general is being very cautious right now because they don't want to alienate the president.
No.
Very strong, powerful leader for the Republicans, getting a lot of things done. Obviously a go-getter, obviously a guy that's accomplishing a lot of the policy goals that have been the product of 60, 70 years of the conservative project. But at the same time, I think that they kind of reckon that all kings eventually, they're not kings anymore. That is just the reality.
They usually die.
They usually do, yeah. And that's not something that anyone should look forward to, be happy about. But it is a reality. What happens after a reign is over? And in this sense, it does seem that Donald Trump is running the show. A lot of the base is being cognizant of what might come next, especially given just the flurry of controversies. And I think one of those is going to be healthcare, is going to be this spending. You're looking at the amount of money, specifically I think there's 18 of the 24 million marketplace plan holders are in states that voted for Donald Trump.
Oh, interesting.
So if their healthcare costs more than double, in some cases, in Marjorie Taylor Greene's district, it's been found that a plan could as much as 4x. We're talking about a significant headwind for...
I will say that I have talked with folks about healthcare, and whether they're independent business people or they're inside companies, as they look forward to 2026, the amount that companies are supporting is falling. And if you're an independent contractor, you are going to see 4 times, potentially more than that, in terms of what your healthcare costs for coverage are going to go to. But let me just hold it there, because that is a headwind for consumer spending and other
Absolutely.
things, which I don't think a lot of people are focusing in on.
Yeah.
But before we wrap, Noah, we are again at the mouth of earnings season. What group, and it could be AI data center, what group, what sector do you think is going to potentially make or break the earnings season?
Make or break? Well, I mean, the obvious answer is going to be anything technology, right? Because they're just so big. They represent such a significant, part of the markets.
Well, the other way you could have answered that, Noah, is, hey, Chris, what are the top 6 or 7 names in the S&P 500?
Read off the stocks, the top 7 or 8 that are shared between the S&P 500 and the NASDAQ.
That's the same list.
It is the same list.
It may
even be 9. Jury's still out, changing every day.
So that's the group you think.
I think that
tech.
Objectively, it's probably tech. To a lesser extent, I think a lot of people are looking for healthcare, industrials, a lot of these other industries to kind of pull out some surprises.
Right, they're looking for I think the hope is the market widens out a little bit.
Yeah.
We get better breadth, we get potentially, better than expected earnings with that breadth, and that can kind of move us a little higher into the end of the year. Let's understand that typically October, November, December tends to be seasonally strong.
Yeah.
Although, as we saw with September, sometimes history does not always repeat itself.
Absolutely. There's the famous saying of nothing ever happens. And I don't want to be the person to say that anything is going to materially change and look like a clown making that determination.
I think all you're going to say, Noah, is stay tuned.
I mean, I think stay tuned is a fair answer. But what would you expect? You expect technology companies that have been doing fine, doing well all day, all year, all day also, all year, to make a material change in their third quarter earnings. I mean, until something materially really breaks, I don't think that we're in for any real surprises. Maybe the odd one out, Tesla, of the companies that we were just talking about, the 7 or 8 largest, the odd one out, Tesla, with the expiration of that EV tax credit.
Yep.
You got these last minute sprint sales that might pop up and look a little exciting.
Well, that was pull forward, right, into the September quarter. So the question is, what's the guidance?
Yeah.
And I think to your point, GM just announced that they're going to have some $1+ billion charge on their EV business because their plan is not unfolding as expected.
Yeah. I think it remains to be seen if Tesla is a technology company.
More than a car company.
More than a car company. And I think that it has always been the promise of what is the next big thing for Tesla. Whereas, a lot of other technology companies it doesn't really feel like there is a next big thing until you had AI. It was just like, okay, well, search is still making a lot of money for Google, and, people are still buying iPhones for Apple. I think that in many ways, that is the big question, is if this market can continue to run with those few and powerful.
All right, well, we're going to leave it there, Noah, and I'm going to use your words. Stay tuned, and we'll have you back to talk more about it, all right?
Fantastic.
Awesome. Thank you, Noah. Folks, that is Noah Weidner, TheStreet's markets reporter. You should be reading his stuff over at TheStreet.com. I'm Chris Versace, like I said, pro portfolio manager, and we will be back with a fresh episode of the Stocks and Markets podcast before you know it.